Okay, well, good morning, everybody, and thank you for joining our webinar this morning. This is all about starting a business, and in particular, running a limited company and the tips and traps associated with that. I'm delighted to be joined this morning by Carl Watts, our Managing Director. Welcome, Carl, who's going to take us through the presentation this morning. We will have time, hopefully at the end, for any questions you might have. If you're used to using Zoom, you'll recognise the Q&A option on your toolbar. If you click on that, that enables you to put any questions forward as we go through, and we'll try and answer as many of those live at the end of the presentation as we possibly can. I'll come back for questions at the end, but in the meantime, let me hand over to Carl.
Thank you, Jo. So good morning, everybody, and welcome to this webinar on running a limited company, tips and traps for startup businesses. So the coronavirus pandemic's allowed many of us to reconsider our direction in life, whether through circumstances such as furlough or redundancy, or because life's changed so much. We realise we don't want to go back to the old ways. For some, this new direction might mean a venture into starting their own business, whether continuing in the current profession as their own boss, or some have turned a hobby or an interest into an income stream. With plenty of new opportunities to set up and run a company, including the potential for setting up a business online, there's arguably never been a better time to start a company. The single most important step to take in starting your own business is to take the plunge and shift from thinking about it to actually taking the concrete actions needed to get it off the ground. So many people think about starting their own business, but entrepreneurs are the people who actually take an action. So setting up a business, there are certain steps that all new entrepreneurs will need to consider when launching their new enterprise, and this includes the company structure, funding and finance, banking and insurance, hiring and paying staff, company's house, reporting, corporation tax, and writing a business plan. So before anything else, you really need to sit down and prepare a business plan. A business plan is fundamental to any successful business. It provides a roadmap for its future direction. Now, every business plan is different, but they will generally cover points including details of your products and services, information setting out how your business will actually operate, information about what you want to get out of the business, the form the business will take, limited company, sole trader, partnership, etc. Cost and pricing information, market research, details of how you'll market your products or services, budgets and financial forecasts, which is normally at the point where you'll probably come to see an advisor or an accountant, something like that. Experienced professional advice can be invaluable in creating an effective business plan, both in terms of the financial elements, but also in creating highly detailed and sophisticated plans that will give you an edge over your competitors. Now, our team's experienced in helping entrepreneurs across a wide range of sectors to create business plans, done it myself, including ensuring that the proposals are commercially effective and tax efficient. Banks, lenders, and potential investors will all expect you to have a business plan in place before they lend or invest. The first thing that they want to know is, let's have a look at the figures. So then we need to start thinking about registering your business. So when launching a new business, entrepreneurs must consider the company structure. This could mean operating as a partnership, sole trader, or as in most cases, incorporating the business as a limited company. Choosing the limited company structure brings with it many distinct advantages when it comes to tax and personal liability. But entrepreneurs should also be aware that also have several important obligations and responsibilities. So a limited company must be registered with Companies House, and you need to provide details of the registered office address and the company officers or directors. And this includes people of significant control within the business. In other words, the people that are actually running the show. Companies need to appoint at least one director as part of their incorporation. No need for a secretary anymore. If you don't have commercial premises and you don't wish to use your home address as a registered office, you can use our address. We charge a small annual fee for that. However, our office cannot be used as a trading address. So startup funding, the money is often the greatest hurdle for people wanting to start a new business. But there are various options available to people who are unable to fund a new venture out of their own pockets. Options for startups include business loans, family loans and investments, outside investment, soft lands and grants and business angels. Looking at working capital funding then, working capital finance is the amount of money needed to cover the difference between the value of the stock and the debtors, people that owe you in your business, and the amount of creditors that you have. Startups must also keep this in mind as they're likely to experience initial cash flow issues. So maintaining a healthy cash flow is vital for any business, but doing so can be challenging, even where sales are strong, if people are not paying you. Fortunately, there are several finance solutions to help in these circumstances. And this includes credit cards, overdrafts, debtor financing, and stock finance. The finance for longer term assets. To grow your business will often involve buying new assets such as equipment, vehicles, machinery, or even premises. The cost of these items are often too large to be covered by general expenditure, and finance is often the only viable way to continue with such plans. Examples of this include commercial mortgages, business loans, hire purchase and leasing. Banking and finance. So the company is required to have its own bank account. The bank will need a copy of the certificate of incorporation to set up the account. You can also open a savings or a reserve account to help reserve funds for your tax bills. I can just say at this point that it's proving quite difficult to open new bank accounts in the current climate. Lots of people are having to use the online banks such as Starling and Tide because the high street banks have been so busy with the bounce back loans. But now the bounce back loans are finished, some of the high street banks are now starting to allow the opening of new business accounts. So when setting up a business, you also need to ensure it's protected by insurance. Generally, there are three types of insurance you need to consider when setting up a business. These are employers' liability insurance, public liability insurance, and professional indemnity insurance. However, in light of recent events, it may be worth investing in a comprehensive business interruption insurance policy, which explicitly spells out what payments will be made in the event of a pandemic or similar event. We're looking at hiring and paying staff. At some point, you'll likely need to recruit employees as your business grows. If you intend to pay a salary to yourself or others, then you will need to set up a PAYE scheme with HMRC. HMRC will issue a reference number to the company for the scheme. And once this is set up, you'll then need to calculate and deduct the PAYE and national insurance contributions every time you pay your staff. Now, this is payable to HMRC monthly or quarterly. Once you go over a certain threshold, £1,500, it becomes a monthly bill that you have to pay to them. You're also required to notify HMRC each time a payment is made to an employee. This is known as real-time information. This is all done through payroll software. If you're paying yourself a salary, then you're required to also run this through the PAYE scheme. So the right levels must be chosen according to your personal circumstances. In some cases, it may be beneficial to pay yourself a smaller salary and dividends to reduce the amount of income tax you're liable for. It is strongly recommended that you issue formal contracts of employment to your staff, and these should set out standard terms and conditions of their employment, including the salary and benefits they'll receive. We've got a standard contract of employment with a now payroll program that we use for our clients. Pensions. So you also need to consider the provision of pensions to staff. So under the sometimes complex rules of auto-enrolment, all employers have to provide for the qualifying workers by enrolling them in a workplace pension scheme. And this includes all staff members aged between 22 and the state pension age that also earn at least £10,000 a year and work predominantly in the UK. Now, employers must contribute at least 3% and ensure that staff receive contributions equal to 8% of the wages. It's up to employers whether they contribute the additional 5% or whether it's provided by employees themselves. Vast majority of employers will pay the 3 and employees will pay the 5 in reality. While an employee can opt out of a workplace pension scheme, employers will still need to initially enrol them and re-opt them in regularly. The record keeping. You are expected to maintain appropriate accounting records for the company. There's no set requirement as to how you maintain the records. HMRC requests that the records are adequate for the size and complexity of the business. But as a minimum, you ought to maintain copies of sales invoices sent to your customers, purchase invoices for any supplier costs that you incur, expenses claim forms for items reclaimed from the business by any directors or employees, including things like journeys, business journeys and mileage claims, petty cash expense receipts, bank account statements for the company account, statements for any company credit cards, copies of any loan, finance, HP, credit accounts that the company has with any other third parties. Now, there are many cloud accounting software packages available with various functions to help you with this process that would be more than happy to demonstrate to you. It can cut down on a lot of work if you're using something like QuickBooks or Xero for that. So company's house reporting. Obviously, this is only relevant if you decided to run your business as a limited company, but every limited company in the UK is also required to file accounts at Company's House every year. And the accounts are usually made up to the business's accounting year end. So the company's year end is originally set on the month in which it was incorporated. Now, it is possible to change a company's year end, but an accounting period cannot exceed 18 months. And there are also restrictions on extending the year end more than once every 5 years. Now, the annual accounts must comply with the Companies Act 2006, including the format and notes to the account. Smaller businesses can file filleted accounts or micro accounts if certain conditions are met, which means they don't need to file a profit and loss account on the company record. So yes, all companies' accounts will be available on Company's House, but the smaller ones will be lacking in a lot of detail that you find in the bigger companies. Now, the accounts must be filed with Company's House within 9 months of the accounting date, and there are strict penalty regimes for late submission of accounts enforced by the registrar. Starts at £150 and grows from there the longer it takes you to file them. Every limited company is also required to file Form CS01 annually with the registrar. This is the confirmation statement. Used to be called an annual return. This form confirms the registered office address, the officers, the shareholders of the company, and the persons with significant control. If you use our office for your registered office, we'll take care of this for you, after checking that nothing has changed in the year, of course. So getting paid, of course, very important part of operating a business is getting paid. While a shop can easily take cash or card payments via the till systems, businesses need to have other methods for getting paid. Now, there are many well-known options out there like PayPal and more traditional methods like Visa and MasterCard that obviously for a small fee, they'll handle the transactions between the customer and the business. Many online marketplaces also have their own payment methods for consumers to use, or have the payment methods both integrated into them. And there's also been a recent development in buy now, pay later services such as Klarna, which effectively offers a short-term credit arrangement. It's usually 3 to 4 months, and that allows the customers to spread the cost of the purchases. So if you're setting up a business, evidence shows that offering flexible payment methods can have a positive impact on the number of sales you achieve. Consumers like to have a choice of payment methods to suit their needs. So this is an area that's worth researching further. especially in the last year, the amount of people wanting to pay by cash has dwindled right down. People had to start taking card payments, they had no choice. Importantly, many of these payment methods now integrate with online accounting software, which means that your accounts will be updated in real time without the need for manual data entry, which of course saves you time and money. So invoicing, if you're dealing with B2B sales, in order to receive money from your customers, you may need to provide them with an invoice. Now, legally, an invoice must contain the following details. It needs the full company name and the registered office address, date, a description of the goods or services, total amount paid. But it's also good practice to include the company's registration number, the trading address, if that's different to the registered office address. Try to keep the invoice numbers sequential if possible. HMRC like to see that. And the name and address of the customer. There's then further information to include if you're VAT registered. And there are a variety of digital applications that can assist you with this process, of course, which integrate with the cloud accounting platforms. So on to corporation tax. So corporation tax is paid by the limited company on its net profits after allowable expenses and capital allowances. This is the tax that's payable after a director's salary before any dividends. So the current corporation tax rate in the UK is 19%, but there are a variety of reliefs that a business can take advantage of to reduce their bill. So corporation tax is always calculated based on the accounting period to a maximum of 12 months. So if your accounting period is more than 12 months, you'll need 2 tax returns to cover the period. We did one yesterday, it's 12 months and 1 day. We have to do 2 tax returns for that. The corporation tax must be paid to HMRC 9 months and 1 day after the accounting period, provided that the accounting period is not more than 12 months in length. If the accounting period is longer than 12 months, then the profits will be split and there'll be 2 payments due to HMRC. One 9 months and a day after the first 12-month period and the second 9 months and a day after the accounting period ending. Once you've registered your limited company with Companies House, HMRC should be advised that your company exists. It will then contact you and ask you to report and file a corporation tax return. So now I'm just going to look at VAT next. So you will need to register for VAT if the annual turnover of your company exceeds the VAT registration threshold of £85,000 per year and you're not exempt for any reason. However, there can be benefits for businesses in registering if your turnover is below this level, depending on the amount of VAT expenditure in your business. And it also depends to a large extent on who your actual customers are. Are they VAT registered? To register, you must submit a form to HMRC confirming the business's details. Once you're registered, you're required to charge VAT on your sales at the appropriate rate. That's known as the output VAT. And the VAT which you incur on your costs is known as input VAT. So each VAT period, you must account for the output VAT you charge to your customers and deduct the input VAT incurred on your costs from this. And you must then pay the net balance to HMRC and file your VAT return with them each quarter electronically and pay any VAT liabilities via direct debit or bank transfer. So as of April 2019, that was, VAT registered businesses with a turnover of £85,000 or more must make VAT returns every quarter using a designated software package, which includes many of the cloud accounting solutions that we use. Now, this is the first stage in the implementation of the government's Making Tax Digital programme, which is intended to take the filing of most taxes online. This scheme is being extended in 2022 to incorporate other forms of tax, including income tax. So moving on to the power of online accounting next. So as the e-commerce industry has grown, So is the demand for effective bookkeeping and accounting solutions that integrate into the innovative platforms that many sellers use to meet these record keeping requirements. This has led to many innovations to not only help keep sellers compliant, but also ensure that they have the real-time information they need to make the key decisions. So taking advantage of accounting software like QuickBooks and Xero's dedicated online e-commerce solution is certainly one way that many new businesses are achieving this. So cloud-based options in particular can really help you get a handle on your finances and allow you to fully digitalize your bookkeeping practices, so you won't have to keep physical receipts, invoices, or sales records. But these platforms offer easy integration. So these platforms and connected third-party apps allow you to easily integrate your existing inventory systems and sales records to provide real-time, precise financial reports, real-time collaboration. So just like you can sell to anyone in the world, these solutions allow sellers to work in real time with their accountant wherever they're located at any time. And automatic updates. So delivered via cloud-based solutions means that you can have instant access to the information that you require, which will be continually updated without any input from you or your accountant, thanks to the automation that they offer. So whether you're just starting out or looking to grow and diversify your new business, it's important to have a trusted advisor that not only understands the necessary tax and accounting rules, but also appreciates the unique trading conditions for online sellers. So we work with a large range of businesses, including startups through to large companies, delivering advice that adds value to their operations. So by managing much of the day-to-day compliance work, we can free up entrepreneurs' time to focus on growing the business while helping them keep an eye out for opportunities on the horizon. So if you're thinking about beginning the process of starting your business, please contact us today. Advice from experienced professionals at an early stage can give you the best chance of success. Over to Joe.
That's great. Thanks very much, Carl. We have had quite a few questions coming in, so let me just start running through those with you. Thanks for a good presentation. The first question was, you mentioned earlier about the difficulty in startups setting up a bank account. Is that something that you can help with?
Yeah, we've got a partnership with Tide Bank, and we like Tide because it allows our bookkeeping to nicely integrate with the company's bank account. So there's also a referral code that we use that allows any new clients to receive free banking for a year. So you normally get the sort code and the account number within half an hour in most cases, as long as they can verify your ID, you're sort of up and running that way. So it's not as fully featured as a high street bank, but most businesses, to be fair, they're just starting out and they don't need all of the features that high street banks are charging them for.
Okay. Question around auto enrolment, which you touched on. So if you're hiring staff and you obviously need to enroll in the pension scheme, does that need the involvement of a financial advisor to get that set up if you're just starting out and you've got a couple of employees, for example?
Not unless you need specific financial advice on what type of investments to make. If you purely want to comply with the legalities in terms of offering a pension to your employees, then we can help you set up an account with NES, one of the pension providers, and enroll the employees in the scheme. Then it's up to the employees then where they invest the money that's going into the scheme. But no, there's no need for a financial advisor unless it's something really exotic that you're looking to be doing. Okay.
Another one here, as a novice, not used to bookkeeping, is there somewhere we can go for training on how to do the bookkeeping properly?
Yeah, we normally invite any potential new clients to come in and see us and find out a little bit about the business and find out about the person as well, because some people are very good on Excel and they're quite happy to do it all on Excel. if you find somebody else that's been using books and doesn't really like computers, and they work fine with that. But then, of course, you're going to find people as well that have seen all of the QuickBooks adverts and are very determined to give QuickBooks a go. So we work out what the best solution is for each client and then train them on that. We've got templates, we've got Excel templates. Obviously, we're all qualified with Xero and QuickBooks. So we'll always find a solution, but it's never the same one for everybody.
But you'll provide the training to go with it.
Yes. Yeah, exactly. Yeah.
Okay. Okay, I've got time for one more question, which you've got here. If you're not employing staff, is it more beneficial to set up your company structure as a sole trader than a limited company?
It depends, to be quite honest, as in most things in tax. Turnover is one factor. There's a certain threshold that we look for with turnover and profits. If profits are over a certain amount, it's about 45,000 at the minute based on the current tax laws. We'll normally say it's going to be so much more beneficial for you to run as a limited company due to the tax that you'll save, all of the extra admin and hassle, because there is more admin and hassle running a company, will be worth it for the savings that you'll make on tax. So yeah, we've got lots of people that it's just them in the company and they're running through a limited company because they're saving lots of tax.
Is tax the way that you would look at this? Are there other aspects of being in business where it's more beneficial to be a limited company, for example?
It can be. Most of the time it is about tax, though, it has to be said. But you've also got the situation that if you're running through a limited company, you're limited to your losses. That's where the word limited comes into a company. You're limited to your losses. You can't lose your house personally if the business goes bad or something like that, for example, because you're limited actually the amount of share capital that you put into the company when it starts, which is often a very low figure. It might only be £1, £10, something like that. So they're the two main reasons that people would run through a limited company, even if they're only working on their own.
Okay. Just had another question pop in, Carl. If you're registered as a limited company, but then, for example, became ill and were unable to run it as planned, is there any support available?
Support as in income support?
Good question. I'm not sure what the, I don't know who put the question in, if they could perhaps expand.
Yeah, I'm thinking that's perhaps what they want. I'll assume that for now anyway. But unfortunately, the answer, you're sort of very limited. It's probably going to be a case of putting in a claim for universal credit. There's nothing specific to companies now.
Okay.
The idea, there's also a good idea to take out some sort of insurance for such things. There are lots of insurance policies that you can take out that will cover you for income protection. I think they're known as.
Okay.
That's what I would suggest.
Yeah.
Because universal credit is very low.
Okay, all right. Well, that finishes our questions, Carl, and brings us to the end of our webinar. We have been recording this, so we will make an on-demand version of this available on the website later today if you need to go back and recap on any of the points that Carl has made. But obviously, Sunny are here to help if you're starting up a business, so give us a call. And we look forward to our next webinar. Thanks very much, Carl.
Thank you, Joe. Cheers.